following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. Well, this is a famous day in the market's history. This is the day when Elvis Aaron Presley was born in Tupelo, Mississippi. Anyway, this was also an important date here from 3 years ago in Tucson on January 8th. Gabrielle Giffords, our representative for Congress, was shot at the shopping center just a mile from me. By a crazy young fellow, and luckily she lived through it. She's only about 60% normal, but she did live through it. There were several other people that died during that melee, but that happened at the same time. We actually we could hear the gunshots from our house, and we knew something really big was happening because we saw helicopters in the air in a moment. But from the time she was shot to the time they had her in surgery was 12 minutes. That is really quite amazing. And she actually got shot point blank and shot in the head and lived through it, which is with 9mm, which is very, very unusual. Okay, let's talk about something positive here. By the way, there's all kinds of gunfights, I guess, in, where are we going in? We're going into France now, I guess. There's been several gunfights. There's been some in London and stuff. Folks, guns don't kill people. People kill people. That's basically it. And you're not going to stop it. It's our Second Amendment, and I don't think they're ever going to change that, but maybe they will. I don't know. I've always liked guns, but, you know, maybe I'm wrong. You know, we'll leave that to history to decide. Okay, first chart we're looking at is natural gas. I'm going to spend the first part of the show today talking about the energy complex because the whole world is talking about, you know, the price of crude oil. You know, it didn't stop at 60. It didn't stop at 50. And where is it going to stop? Nobody knows. But we have a really interesting chart forming now in natural gas on a weekly basis. Once we broke that 360 level, we came all the way down to the 282 level, which was the exact 786 retracement going back to the weekly charts on 2012. That completes a major pattern down here. We've been here now for several weeks. We've had higher bottoms now on the shorter term charts, which is starting to look good. And so we do have a tendency here to believe that we have a potential bottom forming here in the natural gas contract. Whether this is going to be the exact bottom or not, no one knows for sure, but it's acting pretty good considering, you know, what we're looking at in heating oil and, you know, some of the other things. Now, I'm going to put on the last couple of days to show you that we've made these higher bottoms over the past 8 days, and it hasn't broken any lower than that, which tells us that we most probably have some support coming in here in the natural gas at 282. We've had a 10-cent rally today. We got up to the 61% retracement of the high we made yesterday. So the trend is certainly still down, but there's a glimpse of hope here. This is the 135 pattern that Roy Longstreet liked, where you have the higher bottoms. Bottom one happened on the end of the year. Then we had another one on the 6th, and then we have another one today. So that tells us that that pattern is still good, and as long as it doesn't go below the 280 level, natural gas looks like it has a pretty good chance to turn at this level. Now, what we're going to do now is we're going to look at the crude oil next, I believe. I know, yeah, crude oil was the next one I want to look at because here again we're also looking at a potential for a little bottom forming in here because this is the first time in a while where we haven't broken the new lows right away. So if we look at crude oil over the past 36 hours of trading, you'll see that we've completed a really nice ABCD pattern there, and now we have a potential for a Gartley to form down at the 47.70 per barrel level in crude oil. Now, on the long-term weeklies and things, we've looked at these many times before, and they certainly look bearish. We went through the 786 retracement on the crude oil that came in at $50.75 per barrel. We went through that. We went all the way down. We touched just a little bit below $47 a barrel. We rallied about $3 a barrel from there. Remember, all of our rallies since July have only been $4 or $5 a barrel, so that's really all we're looking at right now. The market is incredibly oversold. If you look at any crude oil chart, you'll see that it's down, I think, about 18 weeks in a row, which pretty much is a outlier event in itself, because we have there's just been relentless selling all along through this thing. But it trades really nicely. I mean, if you want to trade something, and everybody gets involved with the S&P and the NASDAQ and Dow, but actually the best thing to trade is the crude oil, because it gives you the most bang for the bucks that you can possibly get. I mean, we've had the equivalent of a 20-point move in the S&P already today, and this is only the first few hours of the trading day. So it has great volatility, really good pattern recognition things occur with it, with the ABCD patterns, Gartley butterflies, and such. So I recommend people take a look at this, from a trading standpoint, because it really does fulfill a lot of the things that you like to have for intraday things that we're looking at. I had a request to put that long-term chart in for the crude oil, and you'll see that we've broken below that 786 level by quite a bit, and there will be a rally somewhere. But since the early July, since around July 4th, this market has been down every single week. I mean, you're talking July, August, September, October, November, December. We're down 6 straight months. And if you went back to 2008 and looked at it, we were down for the whole year. We went down from 2008 all the way down. We were down 10 months of the year till we finally bottomed in February of 2009. So that doesn't mean we can't continue to go a lot lower. $30 a barrel was our low back at 2008 during the end of the world crisis that never was put off by about 6 years. But this thing still looks like it has a chance to make a little bit of a bottom here, but it's just a slight chance at this point. The one that looks the best, of course, is the natural gas that we covered when we started the show. Now, the next part of the complex that we wanted to look at is the heating oil complex. Well, heating oil contract, not complex, because we're very, very close to the 786 retracement in this market. We're only in fact, we're only 9 cents away, which is about 1 day's range in this market, and we're very, very close to that. That comes in at the $1.60 per gallon level in the heating oil. So we're getting close to that. So natural gas is right spot on. Heating oil is not very far away. Gasoline, I don't think they're going to even have gasoline cars anymore, the way this thing is acting, because it doesn't have any friends at all in the business. Hold on one second. We'll put this one up so we can take a look at it also. And we'll cover gold and silver in just a minute. I know I have a couple callers about that already, but I would like to cover I want to cover this complex because it's such a big thing that we're looking at. We're already below the 786 in the gas futures. We did that started this week, that we've broken below the 786 level, and it appears it doesn't have any help. We're at $1.32 now in gasoline, and that's $2 a gallon under where we were just a few short weeks ago. About 3 months ago? Yeah, back in July. Well, it's 6 months ago. Back in July, we were trading at around 310, and now we're at $1.32. That's $1.80 a gallon in oil. That's in gasoline. That's really a very, very steep move down. We will get a good counter trend rally here, and then we'll have to wait and see, how much of a counter trend rally it's going to be. If you look at this long-term chart on gasoline, you'll see that it has tremendous volatility because in 2008 we topped at around 357 gallon in gas. We went all the way down to 84. Wow, 84 cents a gallon in gasoline, and then all the way back up to 3.50, and now we're back to $1.32. So this certainly offers volatility to anybody that's interested in trading things that really have big swings, because this certainly has that. Wow, a range of $2.50 over a 3-year period. I think that's some type of an outlier event for gasoline futures. But, we did not hold the 786 at all, which is a key. I only look at 618 and 786 on these retracements, folks. I don't really look at 0.707. I know sometimes it hits it perfectly, but 707 is the reciprocal of the square root of 2. That's part of the Fibonacci summation sequence, of course, but I try to keep it as simple as possible and just keep it watching at the 786 level to see that that holds. Now, if we go to the go to a shorter term time frame on the gasoline, you'll see that we did make a little Gartley today from the previous day's range. We had a report, I guess it came out today, and we had a relatively asymmetrical Gartley form down at the $1.31.5 level in the gasoline, but it's still quite early in the day, and it's only rallied a little bit from that spot. So my feeling is that this bottom is still in the process of being made. That's what it looks like from the heating oil, from the gasoline. So we watched gasoline, we've looked at heating oil, we've looked at natural gas. So those are the ones that we really want to keep an eye on for what really is important from the complex of the oil complex. We think we're close, but there's no sense trying to catch a falling knife here, because it will most probably, there's so many people that are hurt in this. The first time that it rallies and then sells off, believe me, they're going to try to save what equity they have left by getting out, because we've had an increase in open interest in these things. So there's been commercial selling all along. That has abated, by the way, this week. We've started to see on Monday, Tuesday, and Wednesday that we did start to see that shorts were covering, and the market was going lower with shorts covering. That means that the market is very oversold and it's due for a bounce, but you have to wait for something to really kick it in gear, to get it moving. That's, the bottom line of what we're really trying to look at right here. I've had a question about the stock market. I think I have enough time. I don't think I do, but I'll talk a little bit more about this oil market. The margin, here's our break coming in. We got stocks are still pretty strong on the day. We've got gold rallying just a little bit, and of course, oil is holding its own about unchanged. We'll be right back after this message.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more.
David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Now at 727-445-104.
On Monday, when we had the big sell-off in stocks, it continued, of course, a little bit on Tuesday, but on Monday we hit the exact 61% retracement from the high that we made on the other spike that we had. It was exactly 61% of that spike from December the 15th. So that VIX index does, let's rephrase that. Excuse me, that was a 786 retracement of that number. And as long as we stay below that number, you know, the stocks are probably going to rally. We've hit some really strong resistance today in the S&P. We got up to the 61% retracement up there in the futures at 2050. The NASDAQ hit it right on the money. The S&P went a few points above it, so whether that's going to, you know, be enough. We've had a 3-day rally now coming off that bottom. If the market is really bearish, it will start to, you know, turn down in earnest, and all you're going to get is a 3-day rally. We don't know. This is only 3 hours into the trading day, and so it's still a little early to tell what's going to happen. But those numbers were hit spot on, which really means something in my opinion. Now, I've had a question about foreign exchange, because I spend probably more time in foreign exchange than just about anything else that I trade, because the euro trades better than anything I have ever seen in my 6 decades of trading, because it follows the numbers and the trend, you know, so very, very closely. And all I wanted to do here was to put up this chart here Oh dear, I hope I can anyway. Let's see if it is. I hope the Euro chart popped up. Could someone tell me whether it did or not? Because I'm having a little bit of difficulty manipulating this little mouse. There, good. It did work. Okay, but I wanted you to see this over the last 3-4 days of trading. You'll notice it's been in a really steep downtrend, and we've had several rallies starting in Monday, Tuesday, Wednesday, and we're having one right now where all of these rallies are around 60 to 70 pips. Well, that happens to be the harmonic number that we look at in the euro. It runs at around 60 to 70 pips. When you're looking at an hourly chart, if you're on a 5-minute chart, you cut that in half, it'll be around 35 pips. But that's the way the market moves back and forth. If you did a statistical study of these using, tick data, you'll see that the swing that pops up the most will be that harmonic number that jumps up. And the S&P 500 happens to be, 5 points. So that's pretty much what what you're looking at this particular point right here. We've had a question about the Dow Jones Industrial Average and the rally that we've had right now on whether it's a 786 retracement. And we'll take a quick look at that right now. Pull up the hourly chart. And, it certainly does look like it's certainly above the 61% retracement. And I don't think it's at the 786 yet, but it could be. No, it's not quite made the 786 retracement. It did on the downside, spot on. There was no question. We talked about that on Monday and then also on Wednesday. But on Monday, we hit that exact 786 in the Dow, but we still have not done it yet in the, this is going to be interesting. Let's see if this worked. Let me know if the Dow Jones popped up, because I don't think it did. Doggone it. Just give me a second here. We got to redo something here, and then I'll be okay. There we go. Get rid of this and get rid of this. Holy cow. Well, I lost it all now. There it is. Maybe it's in the back here. Let's just see if this will hold up for one more time, and we'll get the old mouse to do the right thing, and we should be okay. Let's just pray that we did the right thing. I think we're okay this time. Now you can see that we missed the Dow by about 35 points on the upside. That came in at 17,924. It's still early, so we could certainly get there. But we've rallied quite a bit just today already. So it's just continuing on yesterday's rally. And believe me, we could go up and we could possibly make new highs without any trouble at all, folks, because the bottom that we hit on Monday was 786 spot on, and that tells us that this market is still in an uptrend until we break that December 15th low. Well, actually, if we break the January 6th low now, that will be doing it. But this basically is going to, this is I believe, the 5th day of trading in the new year. So that's going to make those first 5 days of January pretty much, it's going to be an up time, because, we did go down and then right back up again. Okay, we've got to take a break here with stock still strong and crude oil unchanged.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. And what I would like to talk about here is the pattern that Roy Longstreet, the great soybean trader, used for many years. He called it the 135 pattern. He actually was the owner of Clayton Brokerage. That's when I first started trading in Los Angeles. Jim Twentyman was a broker for Clayton Brokerage, and Jim was one of my brokers back in 1966. And what happened was he happened to know Roy Longstreet and his son Bill, and I met them through Jim. And this was one of the patterns that he had. It was called the 135 pattern. Really not much was done about it. I used that pattern in my book, Astro Cycles, The Trader's Viewpoint, because I was working with the Longstreets closely at that time. And it was a great pattern, and it still is. If you'll take a look at this, it really does everything that you need, for trading, because if you wait for 0.5, in other words, you have a bottom at 1, then you have a higher bottom at 0.3, and then you have another higher bottom at 0.5, you're trading at higher bottoms means the trend is starting to turn up. And as you can see, what we have with gold now is we have this triangle built at the level of $224 an ounce, and the low side is $1,168 per ounce, which was the 61% retracement of the low we made back when gold was at $1,131 an ounce. And if we can get above this 1225 level, we've really got a shot at somewhere between $1,260 and $1,300 is what it really looks like. So that's the one that we're watching really closely here. and we'll see if it's going to do that. But I believe that the gold does have a really good chance here. We're in the midst of a little correction now from just a couple of days ago. On Tuesday, we made that high, so we backed off just a little bit. And if we get just a little quiet 2-day down or 3-day down, this thing has got a chance to really perk to the upside. As far as the open interest and the in gold and silver, we haven't seen anything at all, you know, to trip up anything very significant. So we'll watch it if we do get an indication from open interest or for volume where we've had a big volume day or something like that with a big range, then we'll have a better idea. But right now, gold and silver are not really telling us very much from the commitment of traders or the open interest. So we'll just wait to see until it pops up. But right now, it still looks good. If we take a look at gold on that long-term weekly, I think we'll just even do it. Let's do it monthly because that's just as easy, I believe. We can see that we've held up at these levels pretty nicely over a long period of time. This looks like a very, very nice chart, looking at the monthly chart, excuse me, on gold, because we hit the exact 61% retracement from the low that we made in September of 2008. That came in at that 1160 area. We made a fast move down to 1131, and now we had this little bit of a bounce. But it's nothing exciting yet looking at this weekly chart. It really isn't. But if you look at it from just looking at it, a weekly chart, and you thought it was a daily chart or something, you would have no qualms about buying this because the trend is certainly higher. You know, we went from 932, we backed off to 11 something, so that's only a normal correction. It didn't collapse like crude oil or some of the other things, at least not yet. So it's got a chance in here, and where we were watching it, you know, so far it's held up perfectly. This is exactly what you want to see it happening. We've seen the same thing happen with the XAU, and I believe we're finishing that. Let me just put this one up so we can take a look at the XAU. And you'll see that we've got an ABCD forming in that one that is not very far away from completing. It's just about a day or two from completing. And then if it starts to accelerate from that level, then you're looking at something really, really exciting. So gold and silver still have a chance in this level, but right now they have not done anything to, tell us that we're, going crazy to the upside. We got a chance. That's all I can say. It's just a slight glimmer of hope, but that could be dashed by a $50 or $60 down move in gold and a $2 drop in silver, which we could see in these kinds of markets. But right now, it's holding its own and still looks pretty good from the long side. One of our listeners asked about Apple, and I really believe that Apple is candidate for a short sale. We're having a nice rally in Apple today. I believe somewhere around that 112, 113 level in Apple is going to cause some pretty serious resistance, and we'll see if that is going to be that's going to be the case. But we'll have to wait and see if that is going to happen. It's still way too early to make any type of a commitment in Apple yet until we get this rally. We broke from 118 down to what, 105, so we broke 13 points, so a 61% retracement back would be 8 points. That would take you right to 113, so that's where you'd want to be watching, and I believe it's trading at around 109 at the present time, so we'll keep that closely in mind. Rich Anderson was not able to be on with us today. He had traveling commitments, so he was not able to be near a phone. So we'll have Rich on next week, and we'll talk more about the grain markets because we've been in a consolidation now in wheat, and also we're going to cover those. Well, in fact, we might as well start that right now. We'll just start with we'll start with soybeans because they've been in a really tight consolidation here for the past, oh gosh, it's been about 6 weeks where beans have been between the 786 and the 61% retracement and have done very, very little. So we want to see which way it's going to break out. The odds favor a move to the downside because the long-term move in beans has been down. We bottomed in late October, then we topped early November, and since that time we've been going sideways. So this will be, if it breaks to the upside, we could be looking at another $1 move up in soybeans, and if it breaks to the downside, we could be looking at a $1 move down to the downside. I know that Rich has a bearish bias in that because it's, you know, the supplies of the wheat and corn and beans are extremely high, and this rally has been caused, as you recall, when he was on the show last week, it was been caused by shipping problems in between how they get the grain from point A to point B, and that's the you know, that's the real key, you know, to watching some of these. Now I want to take a few seconds here to just take at the long-term view on corn, because this market has been, you know, just all over the map recently, and we've had a really good rally of a little over $1, right around $1 a bushel since late October, but we're still heading down. It looks like there's going to be support around $3 in corn, because that's the same low we were looking at back in 2007 and 2008 and 2009, and so that's the main support that we're watching. I got an email from one of our listeners here at TFNN about quantitative easing. And folks, I tell you, I don't understand quantitative easing. I've talked to some really smart people. They don't understand it either. It's an experiment. That's all I'm sure of, because we've never done anything like that before. And my question that I ask myself is, if quantitative easing is so good, why haven't they been doing this since the Fed was formed back in 1913 on Christmas Eve? Why haven't they been doing it since that time? Why is it all of a sudden with Ben Bernanke, a college professor, it becomes a cure-all, and then Mario Draghi picks it up, and I don't know if Germany has it or not, but German bonds are negative now. You know, the 5-year Bund is negative interest rates, so that's not a good thing. I mean, this thing is wholly based on debt. Oh, one point of interest today, you have to love the Italian government, because they finally were honest about reporting GDP. They are now reporting prostitution, drugs, and smuggling as part of the GDP. And they do that to get the GDP to debt ratio down to a level that's not higher than Mount Everest. I don't know how they get away with that, but that is in fact what they're doing. If they did that with our GDP, I'm afraid we might be positive. So who knows? But these are things that are beyond my small little brain to figure out. But I was surprised to see that they put that into their GDP figures, that you know, criminal activity. Well, anybody that's naive to think that criminal activity isn't happening all the time, we know that just by who we elect for Congress and stuff, because many of those spend time in the 8x10 cubicles later on in their lives. So we'll wait and see. Okay, now I wanted to go to the market that really is, I'm going to take a quick look here at the New York Stock Exchange Index, of course. I'm going to do that last, because I want to do the bonds and the notes, because this is where the problem is going to lie, because this is a debt cycle that we're in, and I believe that we're going to see something really significant happen here. We went up and touched the 786 retracement in the bonds again on the weekly basis just yesterday, and we came back below that very, very quickly. So there again, it's telling us that we are looking at something a little bit scary when you look at these bonds from a long-term perspective, folks. This is really, really scary. You know, we're borrowing money from the government at rates. I mean, it's so ridiculous that you can't even talk about it, and people don't even, they just take it as second nature. And you know, hey, believe it or not, I have to say this. You know, I could be, and I probably am, I could be 100% wrong about this, and maybe this is the greatest thing in the world, that the Fed is trying to manipulate a natural cycle of expansion and contraction in the economy like we used to have. We used to have, you know, pullbacks in the markets and recessions every 4 to 6 years. They were like clockwork. And now, you know, we've extended this one out from 2009. You know, we're 6 years into this now, and that's a very unusual thing to have happen. But we'll see if that's going to be a major event. But boy, it's certainly doing that now. Now, if we look at the the interest rate barometer, which is the Treasury notes. We're going to look at those on a weekly basis here. These have lower tops. Now you'll notice that the lower tops that we're having in the Treasury notes is very, very important, because this divergence is this is where our interest rates are made. This is where we have our car loans, mortgage rates, credit cards are all based on the 10 years. And these are, lower and lower. See, we took out the highs from September with the bonds. Of course, the bonds are about 1/6 the volatility and the volume of the notes, but we did not do that in the note market. So it looks to me that rates are getting ready to go higher. And it's just a question of when, and I think that could be the big surprise in the market, that maybe the Fed did something wrong here, and how are they going to extricate themselves out of it? This is the same thing that happened with long-term capital back in 1998, I believe, when I can't remember, guys, Merriweather, when John Merriweather was running it, and they just literally, they could not execute their positions. There was no counterparty risk, and that's what broke it down. So we'll have to wait and see what's going to happen. But when you got negative interest rates in Germany, and our interest rates are 3% on our 30-year bond, you don't have to be a rocket scientist to figure out that some of this stuff is going to be, moving over to our interest rates, because we're AAA rated. You've got Spanish and Irish bonds and stuff that are not even anywhere near where we're rated, and Spanish bonds are paying less than U.S. Treasuries. Now, give me a break, folks. I mean, who's doing the buying there? What are they seeing that the rest of the world is not seeing? Something is certainly wrong. When you're looking at this, that's basically it. You got to be really careful. If you have any questions, it's 877-927-6648. If you have any questions on Elvis Presley's birthday, January 8th, 1935 in Tupelo, Mississippi. I've been to the place where he was born, and it was exciting. I'm a big Elvis fan, as most of you know. I don't do any more of my Elvis impersonations because I couldn't get a crowd of more than one, and that was usually my 3-year-old grandson. He thought it was pretty funny, so we'll have to wait and see if I ever do another rendition of that or not. Okay, now, we've got the stock market still up on the day, acting very, very strong. In the commodity markets, the question that someone asked me is a long-term bullish picture on commodities. I don't know. We've been down for so much. We've been down for well over a year and a half in some of these things, especially the grains and the metals. We're due for a really good bounce. And whether we're going to get it or not, I really don't. I'm not sure. But, some of these things are bottoming, like gold and silver. Maybe corn is even bottoming down in here. We will have to give it the benefit of the doubt, but right now it's still got a chance. Most of the people that you watch on TV are talking about the crude oil, and that's true because crude oil is used by everybody. And the problem is it's beyond the 786 retracements here, so it's really hard for me to say let's buy it. I mean, the natural gas looks okay because it's held the 786 now for 2 weeks in a row, and it's held above the 135 pattern. So that's really what we're looking at. Okay, we've got to take a break here. We'll come back and finish the show, and we'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and I posted the chart of the New York Stock Exchange Index. We just made the 61% retracement of the high we made. You'll notice that we have those 3 divergences, one in July, one in September, and another one in December. To me, that's the key to the whole market because this is the real index that counts. It's very, very difficult to trade this index. I think there might be an ETF for it, but I'm not even sure of that. I tried to find one the other day and I couldn't. Basically, what I do is I look at a barometer for what the market's doing, and then I try to pick of the 3 indices, the Dow, the NASDAQ, and the S&P. I'll pick the index that's the weakest to trade. And right now we've got the New York Stock Exchange at the 61% retracement, and we've got the NASDAQ is at the 61% retracement, but we've got the Dow and the S&P higher, so I want to sell the weakest. So I would be selling the NASDAQ right here at this 42.31 level, anywhere around this area, and then I would risk about 20 points on this to see if it's going to work. So it's just the opposite of what happened on the downside. So all I'm doing is reversing it to see what's going to happen where we are, right now. That's nothing more than that. There used to be a futures for the New York Stock Exchange Index back in the 80s, and then it just lost interest. And the index is still very important because it's a cash index and it's used for the mutual funds, the way they calculate certain things. But it's the broadest market. There's about 2,000 stocks, so foreign stocks, the largest stocks in the world, the most liquid, the highest ratings. It is the best indicator of what the stock market is actually doing. Remember, with the stock market, you only have 30 stocks in the Dow. You have 500 stocks in the S&P and 100 in the NASDAQ 100, but some of those NASDAQ 100s are in the S&P, so they're double counted. So I believe the total amount is 531 shares. That was brought to my attention by Mr. R.K. from our TFNN family, and he brings a lot of good information to us, so we'll see what's really happening. Remember now, we've got the January effect. We got the first week of January is going to be finishing here. Actually, it's a second because the January 1st was on a Friday, so this will be the second week in January coming in, and most probably we'll be looking at a higher close. And then we will follow, unless the market starts giving up today or tomorrow, which is certainly a possibility. But we'll watch what happens on the next run if we do get another run to news highs. The German market has been extremely bullish. Today it's up almost 4% at one time. So it's had a tremendous run also. It's already made it to the 786. In the German market. I think the key thing this week is the fact that the German bond, the interest rate on the 5-year German bond went negative. In other words, they're no longer paying interest rates on that. And you can imagine what would happen if we had that in our country with with old people like myself that wouldn't get interest from their past books or not get anything now. It's only 0.5% or a quarter. But you can imagine if bonds got to that level, you know, what would happen. Something's not right here, folks, when they play games with these interest rate things, because it's going to end badly. I really believe that. It's just a question of not if, but when. It's a giant experiment, and I think it's not going to be perceived very well. That's just my opinion. We'll have to wait and see what history will say about it, but debt is where the problem lies. It's not in the stock markets of the world. It's in the bond markets of the world. So that's the end of the show today. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.